Welcome back to another video. This is going to be my recap from September, and I'm going to go over 3 trades that I took. So the first trade I'm going to go over was a really good A+ setup that I didn't catch too well, and I'll go over my thought process behind that and why I didn't fully catch that play. And the next trade that I'll go over was a Tesla trade that was a really nice winner. But had I taken just one strike price down, I would have made double the money on this play. So these are little details that you have to be very aware of and constantly be trying to improve on. And then the last trade I'll go over was a big loser that I had in a really short amount of time. Alright, so a topic that I kind of want to touch on is opportunities. So in the market, opportunities are varied and disproportionate. And what I mean by that is on one single day, you can have more opportunities on that day than you might have the rest of the week. And maybe you might have more opportunities in one day than you'll have in the rest of the month. Or you might have more opportunities in 1 month than you had in the previous 6 months. Also, I want to go over what the market was doing in September. So this is really key because in trading, you want to follow the market. So as you can see, SPY has been in a solid uptrend ever since COVID. But then at the start of September, right here, we were at all-time highs. And basically all of September, we were pushing down, created an H. And right here was the last day of September. So September was basically all red. And my style of trading is long biased. So my trading wasn't really working in this month, even though I had some orbs opening range breaks that were working. High of day breakouts basically weren't working at all. So I stopped taking those, and that's why I had a lot of break-even trades, because I would just get stopped out super quick, or I wouldn't be confident in the trades that I was taking. So my PnL was definitely a lot lower this month, but I managed my risk really well. Alright, so what I thought was the best opportunity of the month was on 924 on CRM. So all-time high on CRM was 284.5, and a very key level is 270. And yesterday, 923, we broke over 270 and made a high at 279.39, and then pre-market high today was 280.7. So 280 was also a level. And right here, at the beginning of the 930 candle, we make a high at 279.5. And that just gives me a really good entry at 279.4 for the 280 break. And then if we can break over 280 and hold, it gives me no reason to get out. And then I can just hold until all-time highs. So it's Friday today, and the 280 contracts are very cheap. And over 279.4 on the ask right there is my entry. I have a little bit of a late entry, and I only get in 10 contracts. When if I just got in 20 contracts, it only would have been a $2,600 position size, and this would have gave me a really good opportunity to make a lot of money because this is a very good setup. So once we break 280, I'm just going to look to hold. And we have really big size on the ask at 280, but we push through that, and that really shows that buyers are in control. And let's see if we can hold 280. So I've scaled out of 5 of my contracts on that initial push over 280. And right here, we're holding 280 really well. I sell out of 2 there, but the ask is still holding 280. And that shows that buyers are still in control and sellers can't push this price down. So this really gives me no reason to get out, and I should just be holding contracts. So we're holding over 281 and over 280, but I still sell 1 contract there. My contracts are up about $1 to lock in profits. But again, if I was holding 10 contracts here on my initial 20 contracts, I'd be perfectly fine holding. And then if 280 breaks, I can sell out and still make money on this play. But this is an A+ opportunity, and on A+ opportunities, you really need to be patient. So I had sold out and I made 440, so I should be very happy about that. That's a good trade. But look, on this first red candle, we come down to 280 and we touch 280 and hold it perfectly, which shows that buyers are really in control, and 280 held. This is even a really good spot for a hold of 280 to get into contracts and then hopefully get a push back up to all-time highs, because you can tell that buyers are in control today. All right, so the next play was Tesla on 910, and we were forming a mini bull flag with resistance at 760, and the pivot high was 764.45, and we opened at 759.6. So over 59.6 on the ask, I'm going to get in 15 contracts. And right there, I get in right away. I have a good fill price, and my contracts are up from the start. So we get into 761, and I start selling contracts to lock in profits. So I see huge size there at 762, and I also know from Bookmap that there's big size at 764, which is the pivot high. So I don't know if we're going to be able to break over this pivot high, but a scalp here is a nice play, and I can make a good chunk of money on just a quick play here. So I'm realizing that 762 is resistance, so I've sold out of 10 of my 15 contracts. That's 2/3 of my size. And then we're getting down to 760. I sell out of 2. And then if we drop 760 on the bid, I'm going to sell out of the rest. Right there, we're still holding. And really quick, I sell out. This was a really good trade. But if you can tell, I was trading the 765 call contracts. And if I'm getting in over 759.6 for an early entry over 760, I want to be playing the 760 strike contracts. So had I been taking the 760s, this would have been at least $1,000 trade, maybe more. You can watch it back and see in the top right where, when I sold, what the 760 contracts were at, and this would have been minimum $1,000 trade. So this is a big mistake on my part, and I need to be aware of it, but this just happens sometimes, and there's nothing you can do about it if you don't notice. Alright, so I don't know if you can tell, but the two trades that I went over were both taken on Fridays. And performance-wise, my two best days of the trading week are Mondays and Fridays. I think that that's because on Mondays, we basically have two days of consolidation, and then everyone goes into a new trading week with new expectations and hopes for the week. So I find that things move better on Mondays. And then Fridays, I'm trading 0 DTE contracts. So these are cheaper contracts that move way more, so with less of a position size, you can make more money. But that also means that you can lose that same amount of money just as quick on the downside. So right here, I'm taking 15 contracts over 757.8, which is the high of this 930 candle. And right there, I get in, I have a fine fill, and we get over 758. But right as we drop 758, these contracts lose their value super quick, and I sell out within 10 seconds. And you can see that this is a big loser, but I basically cut out at my entry. So even though I had a super tight stop loss, I lost a lot of money super quick. And this seems like a lot of money, but taking 15 contracts, you have to be willing to lose that money to take this play. Alright, so before I get into my numbers, I just want to touch on the idea of knowing when to push it and when to kind of take a back seat. So when you feel like you're in tune with the market and all of your plays are working out and the market environment is conducive to your trading style, that's when you really got to push it and double down and even increase your size. But then when your plays start to not work and you don't feel in tune with the market, take a back seat and don't try to keep pushing it and keep making money, because your opportunities will come back. But if your opportunities aren't setting up, there's no reason to put on risk, and actually that's when you need to be very risk averse. So I was very happy with that this month, that I didn't put on a lot of risk and I just took a back seat because I didn't feel comfortable in my trading style. So the other point that I want to touch on is understanding market environments. So in September, I felt like we had a shift in market environment where all of September we were basically red or choppy. So hive day breakouts, orbs, and pushes to the upside aren't really going to pan out. So that's why I knew I had to take a back seat. And then now let's get into my numbers. So I took 63 total trades. I had 17 winners, I had 13 losers, and I had 33 break-even trades. So I had 33 break-even trades, and that just goes to show that a lot of things weren't working out, and I was just cutting out of plays and just being break-even on them. but my average winner was $326.76, and my average loser was $201.46. I had 33 break-even trades, and my average break-even trade was red $13. I paid $806 in total commissions, and my PnL in the month was $1,703. On September 1st, my account was at $27,741. So making $1,700, that's a 6.139% growth on my account month over month. So I'm pretty happy with that. It's not an amazing month, but it's still a month where it was a tricky month. I managed my risk well, and I still was able to come out green on the month. And finally, I had a profit factor of 1.82. So not above that 2 number that I want to be above, but it still goes to show that I was trading well and I was managing my risk well. So I hope you enjoyed this kind of video where I go over my recap of the entire month and kind of show how I was feeling that month, the trades I was taking from that month. And if you have any suggestions or you want me to change the way I make these videos a little bit, just let me know. So I hope you enjoyed and have a great rest of your day.